I think I'm live. Hey guys, welcome to another edition of Trading Bitcoin with your host Tone Vase. Let me set up the live chat. Still here in Ireland. There we go. Hope everybody's doing well this morning. Got my tea. Yeah, I'm finding Europe time pretty damn convenient. I have to sleep till like 9. No one bothers me because everyone is like middle of the night in the US. So very useful. My live stream numbers are not bad considering everyone in the US is sleeping. California kills me. I have to be up at like 6 in the morning or earlier whenever I'm in California. I didn't do anything to Bitcoin. It's not my fault. It's really amazing how like people are still mad at me about predicting the drop in the price of Bitcoin. Like, what did you guys want me to do? Did you want me to say it's gonna go higher and be grossly wrong? Would that make you all happier? Like, it's really amazing. It's really, really amazing. Like, I don't mean to laugh about the price of Bitcoin because like I'm like broke, but like, would it make everybody happier if I was wrong? I mean, a lot of you think I'm wrong all the time anyway, but I would know that I'm wrong, and that's bad. All right, let's do screen share. I'm actually gonna turn off my camera so that I don't screw up with There's no audio. Okay. What the hell? I don't know. Hold on. I have audio on my end. Are we back? What's going on? Change anything? I didn't touch anything. Okay, it's working now, so let's get back into it. I didn't do anything. All right, let's try it. Good thing I was looking at the live chat. All right, let's try again. I mean, I'll keep an eye on the chat. So if there's anything else, yeah, it could be the cable or something. Could be did something. Maybe I should buy a new microphone, a little travel microphone. Again. Let's okay. Yeah, no, I see my volume bars. Let me put that here. Okay, that again, no sound? No, there has to be sound. There has to be sound. Yeah, I think it should be good now. I'm gonna actually literally keep an eye on it. Yeah, it could have been like touching the mic. Yeah, when I get home next week, I'll reorder my my clip-on mics. Okay, cool. All right, let's get back to it. So what does this all mean? What does this all mean? If we fall down to, let's say, 6,000 this week, to me, I'm gonna magnify and go back to 2014. It means that we will probably accomplish a candle like this, the candle of September 15th, which tells me two things. It tells me that we are correcting faster in time than the 2014 bear market of Bitcoin. And therefore, the 5,000, which I consider to be equivalent as the first week of October, will come earlier. It might even come here in June and not even in early July, right? Which also means that we could ultimately bottom significantly earlier. Now, this does not change how far down we go. Like, how far down we go is actually independent of time. They're two very different things. There is time and there is price, okay? Nobody can predict the future. I don't know exactly when we will bottom. I don't know exactly where we will bottom, but like the market will bottom at a certain price and at a certain time. Our job as traders is to identify the bottom as the true bottom. The bottom in early February, the one that went down to 6,000, looked like a true bottom for the next few weeks. And then I seriously started to question it. The bottom in April looked nothing like a true bottom. I never even considered the possibility of the April $6,500 low as being like, this is why I made that bet with Doug Polk, right? I had almost like this, at least the February low looked like a possible low for 2018, sorry. The low in April looked nothing like, it wasn't lower, right? It was a lower close, right? But this $6,500 low in April, I was so sure that this was not going to hold. And lots of people on the internet disagreed. And that's fine. Like two traders will never agree on everything, right? But we need another low significantly closer to like, we need another low that looks more like the February low than the April low. Or we need a low that looks more like the 2015 9 months of nothing at the very bottom of the trend. Okay. Now, because we are falling significantly faster, the 9 months of, the 9 months of hurt where Bitcoin barely moved in 2015 could only be 3 months or 4 months, right? So we either need a sharp rebound low, like what we saw the week of January 12th, 2015, or an extended period of time near the vicinity of the low bear market. Now, unfortunately, for the 2014 bear market, we got both. We got both. And getting both is actually rare. Okay, like as I explained this before, the 2014 bear market in Bitcoin was pretty painful because not only did we fall 90%, we sharply rebounded. So 3 people had a chance to actually buy below 200, even though it was there 25% lower than 200. No one had a chance to buy it, happened too sharply. And then you had to feel the pain for 9 months because 9 months later, the price was only $230. Okay. So we got both. Getting both is very rare. It's usually one or the other, right? Like here's an example. What I mean by one or the other. Control F11. The gold bear market, the 26-year, I should probably go to a monthly chart. I should have a monthly chart actually. Gold monthly. And big screen. Here's gold monthly, right? So the 26-year gold bear market here, this one, right? So gold went from $800 down to $250. And notice how, relatively speaking, right, like gold fell for 20 years from 1980 to 298, 18 years, right? And then it spent about 4 years in the vicinity of the low. But notice how it never had a spike low. It was a slow bleed, and then it just got stuck at the bottom, right? Now, Bitcoin didn't do that. Bitcoin didn't have a slow bleed. Bitcoin had a capitulation crash, and then it got stuck for an extended period of time for Bitcoin, relatively speaking. Like, 9 months for Bitcoin is about 4 years for gold, right? Like Bitcoin just moves faster, more volatile. But gold never had this final spike. Gold just had the flatness at the lows. The S&P 500 bear market. Again, I should probably go to the monthly chart, but maybe we can use weekly. Here's the weekly, right? So if I zoom out the S&P 500, yeah, I might have to go to monthly, but let's see what happens. Right. So the S&P 500 bear market of 2008, you see how it had the capitulation, then it had that final despondency, but look at the weekly chart. It made a sharp low with 1, 2, 3, 4 horrible weeks. The final 3 weeks of the S&P 500 bear market, like crushed prior lows, crushed it. The prior closing low was 800. The final low was like 650. That is a 20% drop into the low, okay? And look what happened after. It was a sharp rise, and it never gave you the extended period of time you got stuck at the lows. So the market's bottom either like this, like the S&P 500 did, or like gold here, okay, for years, got stuck. In the S&P 500, it would have been probably about a year, maybe a year and a half. S&P is more volatile than gold, and Bitcoin is more volatile than the S&P. So, but Bitcoin gave you the worst of both worlds. The 2014 Bitcoin gave you a capitulation low, and it got stuck at the lows. Now, I'm hoping that we do not see that again, because we don't have to see it again. But I promise you that Bitcoin will bottom either like this, or like this, or both. It really, really sucked in 2015 that we got both. Which one do traders prefer is the question, right? And the reality is a trader shouldn't prefer one or the other. The trader should be ready for either low, a capitulation low, or the stuck at the bottom with no volatility low. And the sooner you can recognize which one it is, the sooner you will make more money. The fact that we got both in 2015 made it tricky for me to call this area correctly. Okay, it was. I really expected, because we got stuck for the first quarter of 2015, I really felt that we probably needed one more lower low, one more capitulation, and we never got it. Which is why I was wrong on the ultimate bottom of the price of Bitcoin in 2015. I was looking for 110, and we only got 140 or 150. I was $40 off. Okay, so keep that in mind. All right, looks like the sound is at least good now. So, so where are we now? So we're somewhere between, these two candles that were flat and this candle that was a big drop. And you can see the current candle. That was the 2014 candles of September. You can see that the current candle is also breaking out of the triangle. This is not how I like to see triangles break down. I would have loved for the price of Bitcoin to bounce back up to 7,500 and then challenge the low of the triangle. I don't like breaking support when you had to go so far to get to support, right? Like kind of like this. So I might have been a little more bearish in early April than I should have been. I should have, well, remember, there was no triangle at the time, right? You needed the third point to draw the triangle, right? But I should have been a little bit less bearish, short, intermediate and short term, in hindsight, of course, at the 50-week moving average. And I did say the 50-week moving average had a chance to bounce the price up. But when I saw that we got stuck here for 3 weeks near the 50-week moving average, I overestimated the ability of the price to continue going down after it had already gone down from 11,500 down to 6,500. Hold on a second, guys. Yeah, hold on. Man, I really have allergies here in the morning in Dublin. It could also be my apartment. I really think like the owner actually has a cat. And I'm kind of allergic to cats, which really sucks. All right, let's get back. Okay, so the price continues to drop. This is really bad. Anyway, that's the weekly outlook, right? You are now looking, if the week was to close today, you are looking at a new weekly close, a new lower weekly close that we have not seen since mid-November. Mid-November. That is bearish. That's bearish. All right, let's go to the daily chart. Oh boy. Oh boy. Well, what do you think? I really thought that we had a chance to get back to 7,000 on the dead cat bounce. We did not. So let's talk about minor good news. Your minor good news is that the volume spike on yesterday was significantly smaller than the volume spike on the 10th of June, the big drop from 7,700 down to the 6,500 area, right? So the bearishness is cooling off. However, you are on a 5 of 9 daily, which means you are looking at 4 more days of downside. Remember what I said yesterday. You want this 5, you want today's close to be as high as possible, because I still want to see that 9 to make my trading easier. And to get that 9, 4 days from now, we will have to close lower than today's close. And today's candle is not looking very hot, okay, at all. So let's see where we close. It's really hard to judge, but clearly the trade is short. Clearly. The daily chart potentially told you, well, actually I did say it in my tweets and stuff, but yeah, I mean, it's a 5 of 9. You're looking for that 9. Oh boy, 63.80. Someone said in the chat, am I gonna win my bet with Doug Polk today? I don't think so. Maybe later this week, but I don't think we're gonna go below 6,000 today. I really don't. Oh boy. Oh, this is not good at all. So here is your here's your 12-hour chart with 2 hours left in the candle. See, this would have made it tricky for me to enter the perfect bearish trade, right? Because I really wanted to see a red 2 break below the red 1, which just happened while I was doing this video the last 15 minutes. But I wanted to see it in the vicinity of 67.50, not in the vicinity of 64.50, right? So this would have made it difficult to make the trade, but a savvy trader off the 9 should have recognized that the 1 to 4 candle bounce that usually takes place after the 9 started before the 9, and we're already in the countdown phase. It's also good that you're gonna hopefully get some divergence. Not really. You're only gonna get your divergence in volume, which is not enough. Like your MACD is gonna be lower, your RSI is gonna be lower if we continue going down, but your volume could be high. Well, not as bad. So there might be some divergence in terms of volume, but that's not enough to act on the trade. So the bad news here is that the 12-hour is kicking off the countdown, and you're now on a 2 of 9, potentially for 7 more candles of downside. But 7 candles on the 12-hour chart is pretty much equivalent to 4 more candles on the daily chart. So you can have a situation, I guess, on Monday, right? What's today? Today is Thursday, so plus 4 days. So Thursday plus 4 days. Friday, Saturday, Sunday, Monday, right? So by end of day Monday, you can have a perfect bounce where the 12-hour and the daily both give you a 9. Could this be a bear trap? Yes, it absolutely could be a bear trap. And I would get and here's the thing on this bear trap, right? The weekly is breaking out of the triangle. So I can and it's only on a 5. The daily is only on a 5. The 12-hour is only on a 2. That means if we fall to $6,000 tomorrow, I will have a 6 on a daily, a 5 on a weekly, a 4 on the 12-hour. You see how we would be smack in the middle of my sequential counts to the low of the current swing. And I would totally get caught in the bear trap. Now, if we continue going down until Monday, on anywhere between Sunday morning and Tuesday evening, I would not get caught in the bear trap. But anywhere from right now until Sunday morning, I can totally get caught in the bear trap. And that is exactly what happened to me at the bull trap. I would not have gotten caught in this bull trap if it occurred 3 days later. Just 3 days later. Because 3 days later, I would have gotten my 9. And I would have said, hey, get out of this lower high based on sequential. So my sequential came up 3 days short, right? And the weekly did the same thing. On the bear trap right here, the weekly was a bit tricky. Let me pull it up. Right, the weekly was still on a 5, right? So at this very peak of the bull trap, my weekly was a green 5, my daily was a green 6, and I'm not going to look for what the 12-hour was, but it's the same exact condition. And we were just breaking. Oh, actually, we didn't have a triangle. Well, we had a triangle here, right? And we were breaking out of that triangle, right? So the current conditions on the sequential and the breakdown of the triangle prematurely are setting up a possible bear trap. But I think I don't want to repeat myself, but I can get caught in the bear trap only only between now and Sunday morning. After Sunday morning, I will be calling for a bounce. Okay, so yeah, be careful. But I have to be bearish. Like they're called bull traps and bear traps for a reason, because good traders get caught in them, not bad traders. Okay, like if this was my only mistake, well, sorry, two mistakes. In the last 12 months, I've made two mistakes. Well, let's go over this. I think this is good. I've made, as far as, and I'm very critical of myself, very critical. I would say in the last 2 years of public price predictions almost daily, I've made two mistakes, just two. One of those mistakes was thinking that the top would be 3 to 4 days later at approximately $22,000. And my second mistake was getting caught in the bull trap, thinking that we had at least 3 to 4 more days, and then reevaluate, take your profit, and then if you go above 20,000, go all in for to 24,000, 30,000, God knows. Okay, these were my only two mistakes. Forget the stupid trolls. I'm more critical of myself than other traders or of me, as far as traders that know what they're doing. Okay, now some people will claim that I made a mistake here at the $6,500 low in early April, and my answer to them is no, I did not make a mistake. That was a short squeeze because too many traders were short, but they should have been short, because smart traders in this area of 6,500 in early April, like myself included, knew that this could not have been the low of the bear market. And yeah, my hairline is also a mistake, yes, but it's not a mistake of my doing. Go blame nature. So this short squeeze was not a mistake. It was an unfortunate trade that, if you understand position size and risk management and proper stop loss placement, this was just a losing trade in a slew of winning trades. Did I make a mistake by telling people that the market is going to reverse any moment, since the short squeeze of April 12th? The answer is no. I did not know when it was going to reverse, but I knew it was going to reverse and go below 6,500. And as of yesterday, I was proven correct, right? So the only two mistakes that I made are the two mistakes that I just described. Okay, and good traders get caught in the bull trap, not the bad traders, right? Now, Van Zen and I did a video a week or so after the bull trap, and his metrics, his trading system allowed him to get out of the of the bullish view at the top of the bull trap. And guess what? If we would have gone 2 days higher, he could have been the one that got caught in the bull trap, and I could have been the one that mitigated the bull trap, because I would have been warned 2 days later, get out of this thing, and be very, very cautious. So a lot of it is timing. A lot of it is timing. Okay, another tangent, hopefully it was a good lesson. Yeah, we're pulling back up a little bit already. So let's see what happens here. So again, here's the 12-hour chart. And The candle is about to end in 2 hours. Look, it's another, like the volume is not very high, though your CMF is pretty low. But look, on a 12-hour chart, your CMF is clearly higher right now than your CMF was at the end of May. So you clearly have divergence between early May, or sorry, between late May. So I do not think we're gonna fall below 6,000 today or even tomorrow. I still think we're gonna hold 6,000 this week. I really, really do. And it'll be kind of crappy if the daily does not make it to a 9 and the count resets, because that means we're gonna go lower, because I need that daily 9. Oops, didn't mean to close that. All right. Here's the 4-hour chart, and the 4-hour chart is on a 6 of 9. So probably tomorrow, or maybe later today. I got 3 more candles. We got 12 more hours to go. We're about this. It's only, like, my computer is on New York time. It's only 6 a.m. So at 8 a.m. New York time, we will then have 3 candles of 4, so 12 more hours. So 8 a.m. plus 12 hours is 8 p.m. So right at the end of the day, New York time. And you can already see how the price is making slightly lower low on the 4-hour, and your CMF is starting to trend up. I really think we're gonna rebound back to the upside somewhere above 6,000. And can we still go to 7,000? Probably unlikely, but it's possible, and that would be a very difficult trade, and it will screw with the daily counts. But I would be a little bit cautious here about being a huge bear. I think whoever mentioned the bear trap right now is potentially right. So maybe down the rest of the day, and then a bounce off of the 4-hour. The 12-hour will have decent amount of room to get you back to 6750, and then an acceleration. So hopefully the daily counts will stay on track. Here's the hourly. I don't have indicators. The CMF is not looking good. The OBV is not looking good. So the hourly could have 6 more bad hours of downside. As you can see, the hourly has broken beneath the prior low, and it's just a fractal. Look what happened the last time we broke the lows. And I said this, that I would be bearish on the hourly chart the moment this red line got broken. What is this? No. And boom, this is where you enter your bearish trade, the break of this line. Boom, you made quick money. Look at this rebound. It wasn't even strong enough to get you back to 6,600, 6,550, or wherever that is. 6,650. And then now we're breaking down again. I think we're gonna bounce back to 6,500, probably later on today. So you're on a 3 of 9. You always look for the 9. So I'm guessing maybe 6 more hours of downside, but I don't know if it's going to be big downside or small downside. I still do not think we're going to break 6,000 today, but it's possible. Anything's possible. All right. Weekly gold, price flipping, unfortunate. What is this? Monthly gold. I didn't even look at what it looked like now. Monthly gold is just stagnated. What is this? Yeah, the NASDAQ. Watch the NASDAQ. If we get a pop on Monday, and we start to form a bearish engulfing, I'll be bearish the Nasdaq, for about a month or so. The daily Nasdaq is on a new all-time high today. Wow, amazing. So look for a Nasdaq top mid next week. You'll get a daily 9 coming off a weekly 9. Hold on, guys. Okay, I'm back. S&P. S&P is on a weekly 913. That is not good. The S&P, I have a feeling it might also give you a bearish engulfing next week. So watch out for that. The daily S&P is on an 8 of 9. So look for a top tomorrow. And potentially Monday off of the weekly bearish engulfing. But I'm just kind of guessing on that one. We took a look at Facebook yesterday, so please look at yesterday's video. I shouldn't have to say it, but there it is. But this is not how markets top generally. Markets top more like this in reverse, like they bottomed in Facebook. This is Facebook weekly, is on a 9 with, and here's Facebook daily coming off a 913. Look at the CMF trending down, and the weekly CMF is also trending down significantly. So be very careful here with Facebook. You can always get back in above 195. We also took a look at NVIDIA. Here's the weekly. NVIDIA is on a 7, probably has a few more weeks of upside, probably what's helping drive the NASDAQ, though I don't know if NVIDIA is in the NASDAQ 100. It's obviously in the NASDAQ, so I have no idea how big the market cap is. So might want to keep an eye on that. If NVIDIA is in the NASDAQ 100, it could help drive. It's not set to top for another few days, and it could help, drive the NASDAQ into that bearish engulfing next week. And daily NVIDIA, I'm only looking at it because I have it opened. And daily NVIDIA is coming off a 9. I don't have any indicators. Oh, I do. RSI and MACD, not really helpful. I'm too lazy to pull the CMF up. All right. Sorry, I wasn't looking at the chat for QA. If you've tipped me for a question, I probably missed it. I'll scroll through it. It's already 11 a.m. I do need to get back to the conference. Where the seminar be in Spain? Probably Madrid, possibly Barcelona, but probably Madrid. Let me get home next week and I'll think about it and let you guys know. Someone is offering me their basement if Bitcoin crashes. Thank you. What country? Next. Someone's asking if they look at the Euro USD on weekly. Sure. Let's take a look at the Euro USD on weekly. Oops. So once again, thank you, TradingView Blockchain, for telling me when the last time I looked at Euro USD weekly, and that was on March 19th. So it's been almost 2 months, 3 months. Wow, April, May, and June. So it's been 3 months since I looked at it. Let's see what's going on with the Euro USD weekly. Oh, how about that? So the euro took a bit of a hit as of April. Yes, so the last time I looked at this chart was May 19th. Oh, sorry, that's April. Wait, was it March? Sorry, March 19th, right? So right here. And I would have said, this looks like absolutely middle of nowhere and nothing. But then you had this red 2 trade below a red 1. And I understand that a red 2 traded below a red 1 back in February. So you take your stop loss. But then you make up for, and then a green 2 traded above a green 1. So if you entered, you take your stop loss. So you had 2 small losing trades. But look how much you would have made by going short on a red 2 below a red 1 the week of April 23rd, as the ratio went from 1.22 bottoming out at 1.15. And look, you're on a 9 coming off a reversal candle with an intersection. So I would look for a few more, like a week or 2 of upside, maybe as high as 1.2, and then probably down. So if I was to project the euro versus the dollar at this point, I would, in 2 weeks or so from now, I would be expecting this, for it to go below 1.15 after a little bit of upside. Let me give it a green arrow and do this. So that's what I would be thinking in the euro. Okay, and how low does it make sense for the euro to go? Well, all I gotta do is extend this line, and there it is. That's how far I'm expecting the euro to go. Though keep in mind, your wick 2 weeks ago has crossed into the previous highs wick. You see this? You've crossed not only into the last wick, but into all the prior wicks. So technically speaking, and this wick did as well. So technically speaking, you did back test, but because you had already back tested, I believe you're going lower. I believe if the euro was set to go to 1.5 versus the US dollar, you would not have came down and went below the lows of early November, late October. So I do think that this second low, and this is about to potentially look like a head and shoulders, right? Like if we go back up here, this is a total head and shoulders, and that would set you up for some serious downside. So you're looking at 0.1 upon the break of 1.15. So potentially going down to 1.5, 1.05. And if the euro, this is important, if the euro gets, oh man, I mean, shoot, I mean, maybe I should delay my trip to Europe from September to next year, because if the euro goes below this Mendoza line of 1.05, holy shit, it's gonna get so ugly for your currency. Like wow. Oh wow. Oh, this is bad. Like if the euro goes below this line, it will rebound off the round number of $1. It'll absolutely will, right? It'll rebound off of $1, maybe go as high as 1.05, or maybe as high as now probably won't go as high as 110. If a rebound goes past this blue line of 1.05, reverses from 1 back to 1.05, and from there, I think it's gonna go to like 0.5 of a US dollar. Like the technicals for the euro right now are very ugly. If the euro was to challenge the world for, and as weird as this sounds, I think that by pulling back from 1.25 to 1.15 over the last few months, which I totally was not paying attention to, by doing this and coming back to the prior support level, it pretty much put a nail in the coffin of the euro. As insignificant as this move might be from 0.25 down to 0.15, from a technical perspective, looking back 10 years, and I would love to get Tyler Jenks's take on this. So Tyler, if you're watching, and I'm pretty sure you will be when you wake up, please comment on your show that for me personally, this little 1 month move by back testing this area pretty much destroys the euro from a technical perspective, because now I expect the 1.15 support to break. I then expect the 1.05 support to break after it gets down there, and then I expect it to break the lows of the early 2000s. Now, this can take another 3 years to achieve, but I think this has just set up the euro for some long-term pain from a technical perspective. And it's really funny how such a little move changes your technical perspective, because guess what? If we were still stuck if we were still above 0.2, well, 1.2 on the euro, I would probably have the complete opposite outlook on the next 3 years of euro. If we were still sitting right here, flirting with 1.25, I would then be looking for it to break above 1.25, go and challenge 1.4, and ultimately challenged every other high. So it's amazing what a difference a month makes. I did not mean to spend this much time on the euro versus US dollar, but it's a really interesting situation from a technical analysis perspective. Now, of course, I will need to look at other metrics. I mean, like a single move back to support shouldn't be your only driver of price, but from what I see on this chart, it's not looking good at all. Oh, that's another very good question. But let me see what the tip question is first. So the very good question is, if you entered a short at the $6,500 breakdown, where would your stop loss be? And here's a tip question. So thank you, Frederick. You have 20 different TD sequential indicators in your TradingView account. Okay, I don't know why you have that many. I know that Tom DeMark has many different ones. I guess if you can please shoot me a private message on TradingView. I don't know when I'll have time to take a look at 20. People say, hey, Tom, I have a TD indicator. I mean, I know how difficult it was for me to make my TD indicator, and I know how difficult it was to get everything I wanted in one piece of code because of limitations in Pine, which is probably why you have 20 different ones, because I stuck 4 different ones in one piece of code, and my programmer is already telling me that if I want to add more diversity to my TD indicator, I might have to break it up into parts, and people will have to load them individually. But yeah, you want to message me privately on TradingView. It's right here. PM on your PM button to me directly. I don't read those often, but I'll look out for it. So let's talk about the stop loss. So if you entered, so the daily chart isn't helpful here. So let's look at the 12-hour chart. That's also not helpful. So I think it's probably the 4-hour chart, or let's do the 1-hour chart, right? So let's assume you entered where is this line? Coordinates, 6,500 on the dot. If I entered my trade right here at this red line exactly, here is where my stop loss would be. As of, and I'll tell you as of when. My stop loss would be right here. $90 or 91. That would be my stop loss. Okay. Now, when would I have set this? Somewhere near the bottom of this candle. Somewhere in the vicinity of under 3,400, I would have set my break-even stop loss to this area. Okay. And those that attended my workshops know exactly why that would be. Now, we can zoom in further and look at, let's say, a 10-minute chart. And on a 10-minute chart, I would consider taking profit on this trade. And I would re-enter it upon the break of this line, hopefully as a red 2 goes below a red 1 because of this 9 on a 10-minute chart. But you don't have to. I would also strongly consider lowering my stop loss to just above this range on a 10-minute chart. I'm not going to go deeper than 10 minutes. But on a 1-hourly chart trading, I would have it at 691. And the moment, let me go back to the hourly chart. The moment your price makes a new swing low, I would immediately lower my stop to the top of the prior day's candle. Okay, so keep that in mind as well. But right now it would be at 91. What would I care more about, a red 9 or an epic hammer doji candle to call the bottom of this current move? The doji candle, the hammer and doji, is more important than a 9 with proper volume in place. Would I like to come to Minsk? I guess, sure. I mean, I don't mind Minsk. I really want to go to Latvia, actually. again. Got Damn, I really abused. All right, I switched my microphone to the speaker on my camera. Sorry, guys. When the hell did I lose audio again? Shit. Sorry, guys. All right, should be good now. I don't know what's going on. I gotta buy a new microphone. I guess the abuse has caught up to this one. I'm on speaker mic now. It's hard for me to keep an eye on everything at the same time. All right, well, I was talking about my workshops. If no one signs up for Boston, I'll move it to Washington, D.C. To go visit Leah, or Atlanta, Georgia. Oh, and affiliate codes. If you guys like my work, and this is how you can support by signing up for any of these products or services through these links. I cut out after the stop loss. Yeah, I was just talking about my workshops. It's fine. I did say that Bali is a definite maybe for next year. Definitely not this year. All right, guys, I'm gonna call it a day. I'm gonna get to I gotta get my conference. Yeah, I'll buy a new mic. I'll order one from Amazon. I'll get it at home. I can buy my own mic, guys. I mean, I know Bitcoin's down, but I can afford a mic. All right, guys. Let's call it a day. It's been another hour. Oh, I kind of almost drained the battery on my computer because I was charging my phone instead. Anyway, I'm gonna call it a day, and good luck trading. We're gonna try and bring you another Bitcoin brief while I'm at the conference. Bye, guys. Oh, I wasn't even screen sharing. Man, I'm all over the place. So anyway, you guys know the affiliate link. Later.